We are truly living in historic times. Right now, we are watching history being written, and in fact, being rewritten. The first thing I want to look at is transitory. Are we really still talking about this? Some individuals have come around, others haven't. We'll look at that. The second thing I want to talk about is getting high. Not what some of you are thinking about, of course, but we're talking about inflation and prices rising and everything getting out of whack. The third thing is the investor playbook, what investors are doing about all of this. So stay tuned for all of that and more. Let's begin. An interesting article here out of Bloomberg. Powell's 5 inflation benchmarks are starting to flash amber. Price pressures are broad-based. Worker pay is picking up. All 5 pillars are looking wobbly at best. That's according to Larry Summers. Now you can scroll down to the bottom. If you don't want to read the whole article, I'll just cover the basics for you and you can see it right here. Are longer-term global forces still pushing down inflation? Over the past quarter century, inflation has generally been low in the US and across much of the industrial world. Powell has ascribed to the variety of structural factors, including technological advances and globalization. Thank you, Kathy Wood, and argued that they would continue to act as a check on inflation even after we get over what we're dealing with today. There are signs, though, that some of the forces may become less powerful, at least for now. Import prices, perhaps the best measure of inflationary impulses from abroad, have risen sharply recently. We are still discussing this. We are still talking about this. And part of the reason is simply that they are looking at the indicators through this viewpoint that they are coming from a boardroom somewhere and, their lunch was delivered to them, all paid for by the taxpayer or whoever. And, this is the way it goes. You have very wealthy people, very powerful people that are deciding the fate of so many, and they don't even know what's going on. You have billionaires, you have politicians. They are looking at all of this data and trying to disseminate it into the public, saying, we're going to take care of the farmers. Oh, yes, that's right. I'm sure that multimillionaire or that billionaire has ever even spoken to a farmer in his entire life, fed with a silver spoon since birth. You cannot trust these individuals regardless. The suit and tie is not to be trusted. Now we've got Goldman Sachs CEO that actually it's discussing a little bit of truth here. Greed is outpacing fear in the world markets. Take a look further down. When I step back and think about my 40-year career, there have been periods of time when greed has far outpaced fear. Far outpaced fear. We are in one of those periods. My experience says that those periods aren't long-lived. Something will rebalance it and bring it a little more perspective. If we don't go down any further, what do you think is going to be that resolution? Well, chances are interest rates will move up. And if interest rates move up, that in and of itself will take some of the exuberance out of certain markets. This is what I've talked about all along. All we need is a little bit of an interest rate increase. It doesn't need to necessarily crash the markets, but we can have rebalancing of portfolios and acting a little bit more prudent at this time instead of pedal to the metal, maximum risk. But the investor isn't ready for that. The investor doesn't want that. Take a look at Paul Krugman, who has yet to come around, trying to clarify my own thoughts on inflation. I got inflation wrong. I didn't see the current surge coming. But then you think that's it, right? If you just take that, it's out of context. But why? I didn't think the fiscal stimulus early this year would boost demand this much. That's right. So it's all good because it boosted demand. But it's not really that way. If you look at it through their lens, which is what I'm trying to explain here, prices are higher on many objects, many things, whatever you need to buy, your food, your energy. I've got many examples of that coming up. And so if you understand that you're paying 20% more on that product, and it's an essential food, let's say, something that you buy every week, well then the total amount being paid at the end of the month for everybody, maybe that increases. Is demand going up, or are the prices rising? And see, this is what they refuse to put through their heads. If you agree with me that they are looking through the wrong lens, hit that thumbs up button. In addition, when you do that, you are basically notifying a whole group of people that aren't aware of the Money GPS about this video. Let's break it down right now in the Money GPS Insights. Let it be known that the narrative of transitory inflation must persist because that allows investors to put on maximum risk. Higher inflation rates means higher interest rates means risk off, and that is so key to understand. It is better to always be prepared, regardless of the current situation and circumstances. But that means both your assets and your situation need to be taken care of. Some people may buy land or commodities or food or have a garden for their assets, but their personal circumstances, maybe they want to get out of debt. Maybe they have some credit card debt that's sitting there. Maybe they want to wipe it out. Maybe they're going to look at where they live and it's not the right place. It's not so safe and secure. Maybe they want to have that backyard garden or their water supply in check and all of these other preparedness items. It's up to you right now to decide what you're going to do with these situations that are right in front of us. I never thought I would say this, but garage doors are in shortage. Yes, supply chain creates garage door waiting game, so the city inspectors allow lenience. Don't worry if you don't have a garage door, you're all good. Cargill CEO says global food prices to stay high on labor crunch. Wait a second, I thought it was only temporary. I thought it was only transitory. I thought that the food prices were only increasing by 2 or 3%. Well, maybe they have something to blame now. Energy crisis and tight freight markets are adding to the costs. Food versus fuel fight to become more intense. That's right. Food prices will likely stay elevated in 2022 as disruptions to the global supply chain are set to persist. Now, this is coming from a very high-level person right here. I thought inflation in ags and food was transitory. I feel less so now because of the continued shortages in the labor markets. That's one of his inputs to the supply chain, and we're watching most carefully. You can see the agricultural prices going up. And I don't need to look at a chart to tell me agricultural prices are rising. You, the individuals out there, no matter where you are, have told me from all over the place. Literally every country I have heard from. People in Africa, people, just today I heard from Hawaii. I heard from all kinds of places, coming from everywhere you can think of. People are experiencing that. Does that mean every single person in every single city is experiencing this? No, but it means that the problem is widespread, and food prices being so key, as well as animal prices too. Beef prices rising 20%. 20% for silver. Anybody eating these animals, they are going to experience some serious hit in their wallet. I'm telling you right now. If you're noticing empty shelves when shopping for Thanksgiving, you are not alone. In the week ending November 7th, retailers were running lower on stock of essential Thanksgiving items compared to the same last year. They do give you the details here, but I think it's important to see year over year. You could look at it 2020, kind of a weird year, but look back 2019 and 2018 and so on. Okay, it is just unbelievable. And one of those individuals that loves to deny what's happening right now is your favorite and mine, Janet Yellen. One of the things that she mentioned here was related to the contagion effect with Evergrande, with China, with the property sector. She was interviewed here, and on CBS News, they put the transcript, and I read through it. Just want to highlight one important point. Also on China, before we leave that space, there are fears about toxic debt in China and a potential Lehman Brothers moment. How concerned are you about the risk to the rest of the world by what's going on inside of China right now? Are you confident that China can control it? Look, it's something that's important. We're monitoring it closely. By the way, monitoring closely was said about 4,000 times in this interview. China has a real estate sector with firms that are over leveraged, and it's something that China is trying to deal with. Real estate is important. It accounts for 30% of the demand. Slowdown in China would have global consequences. Remember that. China's economy is large, and if the China economy were to slow down more than expected, it certainly could have consequences for many countries that are linked to China through trade. Always remember that there is a domino effect. This goes for anything. This is just one point that's very relevant right now, but relates really to everything. My friends in California, please pay attention. This is related to the pension funds. I've been warning about the pension funds on this channel for a very long time. Take a look. Retirement fund giant CalPERS votes to use leverage, more alternative investments. You could argue this is a good thing. That's up to you. But at this time right now, when we have more risk than ever before, these are the broad markets in the US, just showing where you are over the last, couple months. We don't need more risk. We really don't. And yet they are taking that risk today. Your pension is going to be affected by what they're doing. US pensions are hundreds of billions of dollars short of what they expect they need to pay public worker retirement benefits. And what do you do when you're short on cash? That's right, you double down. You go to the casino, when you lose some money, you double down. And then you lose a little bit more and you double down again. And then you sell your wedding band and you double down again. Maybe not. Let's look at what the fund manager survey has told us about what investors are doing, the big money investors, hundreds of billions of dollars worth. Okay. Long tech remains the most crowded trade. What do you think is the most crowded trade? Long US tech stocks. By the way, so you're going to see these colors coming up. The darker blue, that's November. The lighter blue is October. So you'll see the change. Long Bitcoin has absolutely increased month over month. And then long ESG. Everybody loves those ESG funds, right? It's really just Apple, Amazon, Facebook, and so on. 35% of investors think inflation is permanent, but look at the funny part about that is that it actually is, it's transitory. 61, it was 61 previously, it's 58 right now. However, I mean, I don't have the words. I honestly don't have the words for this. It's so fraudulent, but let me just move on. Inflation expectations fall to the lowest level since March 2020. Net percentage expecting higher global CPI. So that's it. According to the fund manager survey, inflation is at the highest. We don't have to worry. It's still transitory. Investors expect 1.5 rate hikes in 2022. So despite this, they still believe that the Federal Reserve will increase interest rates 1.5 times. Fund managers, investors are still long inflation assets and short taper assets. So at the top of the list here, positioning versus history, commodities, then you got banks and US equities. And then you could look at the bottom of that, in the negative there, bonds and emerging market equities. So I've just shown you that you could look at all of this data. You could see what the fund managers are doing, but ultimately it matters what you are doing. And that's why I mentioned CalPERS, because that affects you if you are part of that. I know many of my subscribers have mentioned that to me. That's why I talk about it. You could look at the fact that the S&P 500 on many different indicators are just way off the charts. Okay, those red areas there, that's the percentage above or below. So when it's red, it's above the average. We are way above the average, statistically expensive relative to history, whether that's on trailing PE, and it just gives you all the different examples. It's madness today. So that's why I say to you, you've got to watch out. What are you doing with your personal circumstances? Have you adjusted your portfolio? Are you still pedal to the metal? Are you starting to add some alternative investments like CalPERS is about to do and adding leverage at this time? Probably not wise, but it's up to you. Let me know what you're doing in the comments below. How are you preparing? What are the actions you are taking today? It's important that we all share this information. If you want to support the channel, hit that thumbs up. It's right down there, so I do appreciate that very much. And again, when you hit that thumbs up, you're basically notifying the algorithm to tell other people out there, hey, the Money GPS has got some good stuff. If you haven't seen this video yet, you definitely want to check it out. So just click it and I'll see you there.